Hello and welcome to the Share Talk Bulletin Board Heroes on Thursday, the 24th of May. And starting off with Egdon Resources, where the government's been accused of hiding the fracking developments behind the royal wedding. I can't imagine why they'd want to do that, but at least we've seen shares of the fracking companies such as Egdon rocket over the last few days. This chart here actually reminds me rather of the chart of turn when it was around... well, it's almost the same chart and actually the same kind of breakout there. We've had the mid-move breakout through 8-9 pence, and best case scenario target here is high as the top of this diverging triangle, heading as high as 20 pence over the next month or so. Only back below 10 pence, that old August peak, really delaying the upside scenario. Obviously, we are very overbought at the moment, so one would expect a little bit of a pullback or at least consolidation between the 10 and 12 pence area. Next up, a stock which continues to baffle many, Frontera Resources. Not quite sure whether it's a hit or a miss on the fundamental front, but adding a little bit of charting angle here. We do have a rising trend channel that you can draw from as long ago as the middle of 2016. Floor of the channel around 0.4 pence. Obviously, these things kind of overshoot and everything else, so we could be down to 0.35 or the upper 0.3s. If you're cautious on the stock, maybe wait for a break back above either the 200-day moving average at 0.48 or the 50-day moving average at 0.51 before targeting the dream destination at the moment, which would be 0.9 pence, the 2-year resistance line projection. Another stock where I'm taking my reputation in my hands is Immu Pharma. Here, obviously, we had the rather upsetting breakdown for the shares last month. Interesting that we had this, well, after the initial rebound, the shares basically died a death in terms of the volatility, tiny day candles there, but we've had a push to the upside today of quite a significant amount. It rather reminds me of the way that we went into these small candles and then pushed higher in November. So if you are a bull of the shares, a chance of at least a partial redemption here and maybe a test of the 40-plus zone. Obviously, stop losses here should be rigorously enforced, ideally below the 27 pence level. Going on to a stock which was requested on Twitter by a couple of people, Mobile Streams. Here we had an attempt to break to the upside yesterday. That seems to so far have fizzled out a bit. We also had an attempt at the beginning of the month and during April, or attempts. Probably the bottom line here is that while we hold above the 50-day moving average at 1.32 pence, we could regard the stock as being in recovery mode, although really it is the 200-day moving average at way up at 2.19 pence, which is the boundary between bearishness and bullishness. We're currently really in the bearish area while we remain below the 200-day line as we have for most of the year. But still a chance of a rebound or more recovery while we're above the 50-day line. No such questions as far as Parkmead Group is concerned, but here it's interesting in the sense that we've had this saucer-shaped recovery, one of the strongest charting patterns that you can have over the past year, and then the break, which even took out the initial high of last year, just around the 73 or 72, 73 pence level. Obviously, we're going to get a bit of consolidation here, but I think that the point to note is that basically this line from 2015 is the neckline resistance on the reversal. If we can get through 77 pence, which is the neckline level on a weekly close basis, the next destination after that could be a relatively swift push over following weeks as high as 100 pence. So definitely a situation to look out for there as far as ongoing recovery at Parkmead. Finishing off with a stock which has been highly volatile in the recent past and continues to be so, but worth a mention at the moment. Here we've got Providence Resources and attempts to break towards the previously suggested targets towards 16 pence, maybe a bit more. Share slightly flat today, but any dips towards the 50-day line at 10.5 pence regarded as a buying opportunity and only really back below 10 pence kills the idea of recovery here. That's it from me. More updates tomorrow.